when people go to the bank and they sign a mortgage commitment, they think that's it. We got the mortgage. Mortgage is approved. So if you have signed a commitment and you're thinking of buying a house, or you have signed a commitment, you're looking for a mortgage, you're at the right place. Stay tuned, because we'll have today with us Sudipta Goashal, the mortgage specialist. She's going to tell us the 5 biggest mistakes people make when they're purchasing a house. So this is Rita JT, a real estate broker with Century 21 Innovative. Stay tuned until the end, because we have today, as I mentioned earlier, Sudipta Goashal. So let's welcome Sudipta Goashal from Dominion Lending Center.
Thank you, Rita, for having me once again.
No, it's a pleasure always.
Yeah, and the weather is changing, everything is so colorful, and this is Halloween
Look
time.
at the color here.
Oh yeah, look at our colors today. And this is the Halloween time, so everything is about spooky. So let's talk about the scary stuff. Let's talk about the 5 mistakes that we see people making when they're buying a new home.
Yeah. So what I was talking about, mostly when I've seen when people sign the commitment, they go to the bank or the mortgage professional, they are so happy. Oh, we signed the commitment, we have a mortgage, everything. So what in your experience, and we have experienced so many times, that is that a final approval that everything has been done, or still there are things that people should to be taking
Mindful of, right?
Yeah, mindful of.
And I think it's an excellent question, and I get this question from not just people who are buying home for the first time, but people who have made those purchases many times. So signing a commitment, I think it's a big milestone, and it's a happy milestone, right? That you've already got a lender who's approved the application.
Yeah.
But there is still a lot of steps between you signing that commitment to closing of the house. So signing a commitment means, yes, it's been approved, but when it comes to you, it comes with conditions. So the commitment letter is conditional. So there are certain broker conditions, certain solicitor conditions, which we have to fulfill to the lender's satisfaction. And the lender is well within their rights to cancel the deal if those conditions are not satisfied.
So sorry to interrupt you. When you say mortgage, like a broker condition, so what do you mean by broker conditions?
So broker condition would be certain conditions which your mortgage person has to satisfy, and very standard are income confirmation, employment confirmation. So when we say about income confirmation, it would be more like providing the pay stub, employment letter, T1s, NOAs. If it's a business for self, bank statements, employment confirmation, and then would be a credit bureau report. Okay, so those things, down payment confirmation. So these are very standard broker conditions. Mm-hmm. If you have a rental property, so the rental income. If you have another property, the mortgage statement of that property. So those are the conditions
you have to provide them in case if you have not provided them before.
Yeah.
But they can even call your employer or human resources department to confirm the employment.
Absolutely, and all of that actually happens after you sign the commitment.
After you sign
so
the commitment.
When we're talking about the mortgage process, yes, there are certain things that we provide to the lender upfront. But once you get a commitment letter, there would be these conditions and some more details they would usually ask for. And it is now that on your broker, and also for the client to manage it properly and make sure it is satisfied with the lender's condition. Yeah.
Yeah, and also I have seen when we see the commitment, there is conditional upon appraisal.
Oh yes.
That is a big thing, because keep in mind, lenders are the biggest players in real estate game, because they are providing you, they have to lend you the money. They want to make sure that the person to whom they're lending the money is capable of paying on time, and there is not going to default. And plus also they want to make sure that the property against which they're going to lend you the money is
worth the amount
that you're lending.
And you know what, adding on to that point, this is one condition which just does not protect the lender. It also protects the client, the buyer.
Oh, absolutely.
Right?
And not only that, I would like to add one more thing, because let's say your property is worth 600,000 and the appraisal appraises that the value is only maybe 30,000 less than that what you have purchased for. So you have to come up with that money which is
the gap,
the difference,
yeah.
and the bank will only lend you the percentage of what the appraised value is. Appraised value is
100%.
So you have to come up with whatever the difference is.
Yes.
Am I right?
Absolutely right. So
Yeah.
they're going to only, we call it, in our terminology, we call it LTV, loan to value ratio.
Yes. Yeah.
And the value is what the appraisal value is. They do not take anything else. So if it comes below what your purchase price is, then you have to pay the difference.
Yeah.
So I think, the second most important mistake would be not to get your appraisal done.
Absolutely.
So that would be the second one. The third one I always think is that people wait too long. And I'm sure Rita would talk about that too. A lot of times people without talking to a professional, they decide that, I don't have enough income or enough down payment to buy a house now. What our suggestion would always be is that always get your foot in the door. Your first purchase doesn't always have to be your dream home, but it's definitely something that's going to help you get your dream home. So don't wait too long.
Yeah. So that is, I can share an example with you. Somebody I met like in 2018, they were very, very new to the country, and I helped them lease, rent a property, a condo. So, but I kept in touch with them, and within a year's time, they never even thought that they'll be able to buy something in a year's time, but I just educated them and introduced them to the mortgage professionals. They talked to them, they sat down, and then they thought, okay, you know what, with this much money down as a first-time home buyer, we can even use our RSP money, whatever they have saved in, and they'll be able to buy. So with 5% down, they bought a townhouse in Scarborough. And now it's been 2 years, the same townhouse is now way worth the value, we sold it for 800,000, and which they would have been so happy even with 720 or 7, but the way the market is going, what I'm trying to say is that the equity they built in the 2 years in that property plus the 5% down what they had paid, even minus what all the expenses were, brokerage fee or anything they had used to upgrade their house in order to bring it to the selling standard, they had enough of equity that they could put it in their dream house and buy a house over $1 million.
Exactly.
So now, if they would have not at that point bought that property, do you think they would have been able to save more than 200,000?
Possibly not.
In 2 years? No. So even if you today don't qualify for your dream home, as Sudipta mentioned, talk to the banks, whatever you qualify for and where you can get the property, get into it and get your feet wet.
Exactly. Don't wait too long. Don't always expect that my first purchase is going to be my perfect dream home, but it's definitely going to help you get to your dream home.
Yeah.
So
the next mistake.
Coming to the
commitment.
Fourth one would be, do not take any other loan in between the time that you sign your commitment to when you do the closing or get your pre-approval and your closing. I've seen this, and again, I'm going to mention car loans because that's been the biggest one. Students loan and car loan. Sometimes people want to get that luxury car right away as soon as they get their house or before that. That makes a huge impact on your debt servicing ratio or your ability to pay your mortgage. And that totally impacts your pre-qualification and even your commitment. So do not take any loans between the time that you get your pre-qualification to when you close your home.
Exactly.
The next big one is do not change your employment status, which means that do not quit your job. Even if you're getting an offer which is paying you higher, you can absolutely accept that. I'm not saying let your career go down, but always check with your mortgage professional. The exceptions that we can make, we just want to make sure that if you're changing, your mortgage professional knows. But in a best scenario, do not make any changes to your employment. Just don't resign from your job. Just don't quit your job. Or go into, if you're getting a salaried income, don't go into something which is a contractual position or a commission position. All of that would again impact the commitment, and lender would be well within their rights to cancel the commitment in that scenario.
Yeah, I think in most of the cases, the mortgage professionals do explain the clients
Absolutely,
that this is the commitment, and after this, these are the things you need to go over. But I think still sometimes maybe some people, they miss it or they don't take things so seriously. But you as a client, you as a customer, you have to be very, very careful that you go through the commitment and see what the conditions are. And if there is any question, talk to the mortgage professionals so that they can explain to you what that means.
And as a mortgage professional, the job is just not to get you a mortgage. Our job is to also educate you and also to work with our clients till the time there is closing. And in my case, I work with my clients even after the closing. Because I have barely seen a client of mine who has done only one purchase. People come and keep on doing purchases. So you have to know what you do in order to keep on keeping your your credit scores right, your buying abilities correct. And that brings me to the last point, is your credit bureau. So just make sure there is nothing new that comes on your credit bureau before the close. We have seen situations where a day before the closing, the lender has asked for a new credit report. And we surprised sometimes when we pull it out, we see the scores have changed, or there's something new that's showing in the credit bureau report. In a client of mine, suddenly a student loan came up, and it wasn't there when we put it up before. And his wife is going back to school in December, so they just took a student loan, which wasn't even there. So that is a big no. Do not do something new, do not take a loan. Make sure there is nothing new that comes onto your credit bureau report.
If you have to, just talk to your mortgage specialist if that is something you can do it or you cannot do it at that point.
Yes, so they are your guide. We as your mortgage professionals, and also we work as a team, we are your guide. So if there's anything that's changing, please make sure you're keeping them in loop, us in loop. And our job is to obviously educate and guide you through the process.
And therefore, don't forget to subscribe the channel or hit the bell icon below because as I mentioned, I always mention that there will be a lot more videos on mortgages, purchasing a house or investments, or having regarding your real estate portfolio will keep coming up, and you will be informed by the bell icon. And the details are in the description box below, so feel free to contact us, whether you want one-on-one or you want a phone call. We'll be more than happy to help you if you have any question. Thanks, Sudipta, for coming.
Thank you so much.
It's always been a pleasure to work with you. And just to let you know, guys, that the house where I'm sitting right now, the mortgage was done by Sudipta, and she's a wonderful person to work with, and I would highly, highly recommend. If you have any question, her information will be in the description box below as well.
Thank you, Rita, and happy Halloween, everybody.
Thank you. Happy Halloween. Enjoy your day. Bye.